A monumental shift is descending upon Social Security payments, and a vast number of recipients are completely unprepared for what it entails. Some will access their accounts and find a heftier sum than before, while others will be perplexed, questioning why their raise seems less than they hoped. This is not speculation, it's not exaggerated news, and it's not a matter you can dismiss. The Social Security Administration has officially announced substantial revisions affecting retirement, supplemental security income, and Social Security disability insurance, and these adjustments are already underway. Ignorance could cost you funds, postpone your deposit, or catch you off guard with withholdings that silently diminish your check. In this video, I'm clarifying the actual situation, who profits the most, who must exercise caution, and why your next payment might surprise you. Even as your benefits grow on paper, if this insight is useful and you want to keep abreast of authentic Social Security, SSI, and SSDI developments that impact your wallet directly, subscribe to my channel now. We deliver transparent, reliable news so you never miss vital payment hikes, regulation updates, or due dates. Subscribing is gratis, and it ensures you stay knowledgeable and secure. Also, activate the bell notification to be alerted the second a new video posts. Envision this. You rise, check your balance or mail, and realize your Social Security deposit is poised to exceed last month's. For millions across the country, that reality is imminent. Presently, the SSA is deploying changes that instantly alter retirement benefits, SSI, and SSDI. And these aren't whispers, hunches, or internet myths. They are factual tweaks that can deliver more dollars to you, but only if you comprehend what's transforming, when it kicks in, and how it relates to your individual life. Many hear payment boost and dismiss it as a paltry amount that barely registers. But examine it thoroughly, and these modifications can yield a considerable effect over 12 months, especially with soaring living expenses. For retirees, disabled persons, and low-income folks leaning on SSI, every cent is vital. Food is pricier than years back. Power bills are steeper. Housing, taxes, and healthcare fees keep escalating. Social Security was engineered to move with living costs, and that's precisely what's unfolding now. The newest alteration is anchored to the cost of living adjustment, frequently abbreviated COLA, which draws from inflation numbers. When inflation climbs, Social Security benefits should ascend too, enabling recipients to sustain their buying capacity. That's the concept. And while it doesn't always sync flawlessly with real-world spending, this approaching increase remains substantial. What's crucial to realize is that this raise spans multiple schemes: retirement benefits through SSA, disability payments under SSDI, and supplemental security income are all included. That means elders who contributed to the system, people incapable of working due to disability, and those with minimal income and assets are all experiencing shifts. However, the way the increase manifests can appear a bit distinct based on your specific program. Some will notice it in their January disbursement. Others might detect it earlier owing to payment timing rules, and a few could puzzle over why their uplift looks smaller than forecasted. That muddle is typical, and it's exactly why grasping the whole image is essential. Let's delve into the notion of a payment increase itself. When Social Security proclaims a COLA, it's stated as a percentage. That percentage is implemented on your existing benefit total, not a fixed cash value for all. So, if two individuals both obtain benefits, but one has a larger monthly benefit than the other, the monetary increase will vary, even with an identical percentage. This is why you might hear one person mention they're gaining an extra $50 or $60 monthly, while another says their increase is just $20 or $30. Both can be true. For the average retired worker, the increase can be tangible. Over a year, even a mild monthly lift compounds to several hundred. For SSI recipients, the federal benefit standard is elevated, which directly sways the maximum payable amount. For SSDI recipients, the adjustment assists in countering higher day-to-day outlays and medical bills that often weigh more heavily on disabled individuals than the general public. While no one would contend Social Security wealthifies anyone, these hikes are meant to thwart benefits from eroding over time. One element that routinely sows confusion is scheduling. Many suppose that once an increase is declared, it materializes right away. In practice, there's a timetable. Social Security, retirement, and SSDI benefits are issued monthly, commonly on Wednesdays, tied to your birth date. The enhanced amount customarily starts with the January payment. SSI, by contrast, is paid at the month's outset, and when January 1st lands on a holiday or weekend, the payment might arrive sooner, sometimes in late December. That can foster the feeling that the increase came early, although it's technically the January benefit. Another point people stress over is whether they must act to get the increase. The answer for most beneficiaries is no. The COLA is automatic. If you're already collecting benefits, the SSA adjusts your payment for you. No application, no call necessary, and no form to submit. That noted, it's still key to inspect your benefit letter when it comes. The SSA normally sends a notice outlining your new monthly total, any deductions, and when the payment will happen. Studying that notice can help you identify errors or understand why your net payment might diverge from your expectation. One rationale some feel disheartened upon viewing their new payment is Medicare. For many beneficiaries, Medicare Part B premiums are taken directly from Social Security checks. When Medicare premiums rise, they can neutralize a portion of the COLA. This means that even though your gross Social Security benefit increased, your net payment might not grow by the COLA's full measure. In some cases, it may seem like there's barely any increase at all, but there's a shield called the hold harmless rule that covers many beneficiaries. This provision bars Medicare Part B premium increases from dropping your Social Security payment below the prior year's level, provided you meet certain requirements. Not everyone qualifies for this safeguard, but for those who do, it can be consequential. For SSDI recipients, there are added thoughts. Many on SSDI anxiety that a benefit increase could influence their eligibility for other programs, such as Medicaid, SNAP, or housing help. In some instances, higher income can affect eligibility or benefit tiers for need-based initiatives. That doesn't signify the increase is poor, but it does underscore the need to understand how different benefits intertwine. Occasionally, even a slight uptick in Social Security income can initiate a review or change in other assistance programs. Remaining informed and, if required, talking with a benefits specialist can help avert surprises. SSI recipients face similar apprehensions since SSI is strictly grounded in income and resources. The increase in the federal benefit rate lifts the maximum sum, but other income and living arrangements still factor into how much you actually receive. If you have other revenue streams or get in-kind support, your SSI payment might not rise by the entire federal rate adjustment. Again, the crux is knowing how the rules pertain to your particular scenario. Another pivotal piece of this update involves working beneficiaries. Some people collect Social Security retirement benefits while still employed, notably those who claimed benefits before reaching full retirement age. Each year, the earnings limit is revised, and earning above that limit can temporarily trim benefits. With new updates in effect, it's imperative for working beneficiaries to know the current earnings caps and how they interplay with monthly payments. While this doesn't directly modify the COLA itself, it does sway how much money you actually obtain over the year. There's also the psychological facet of these increases. For many, Social Security isn't merely income, it's assurance. Knowing that payments are rising can furnish comfort. Even if the sum isn't massive, it's a signal that the system is responding, at least partially, to economic conditions. But is it realistic to expect this adjustment to solve all financial strains? However, it's equally vital to be pragmatic. A COLA increase isn't comparable to a bonus or government stimulus. It's an adjustment intended to pace inflation, not outstrip it. Budgeting with that outlook can help evade disappointment. Some beneficiaries wonder whether these increases are enduring. Social Security's long-term solvency is a constant debate subject, and headlines about trust fund shortfalls can be distressing. While those issues are genuine, they don't change the fact that current law mandates COLAs be applied based on inflation data. For now, the system continues to dispense benefits and apply increases as scheduled. Staying informed about policy conversations is advantageous, but it shouldn't incite panic about your next check. Scams and misinformation also tend to proliferate whenever there's news about benefit changes. Swindlers might approach people alleging they need personal details to process the increase or that benefits will halt unless action is taken. The Social Security Administration does not call, text, or email requesting sensitive information unprompted. Any increase is applied automatically. If someone contacts you asserting otherwise, that's a clear warning. Shielding your personal data is just as critical as understanding the increase itself. For those who oversee household finances diligently, this increase can be a moment to reevaluate priorities. Even a minor bump can aid with mounting utility bills, prescription prices, or commute costs. Some choose to reserve the extra cash for emergencies, while others use it to shrink debt or cover essential needs that have become dearer. There's no universal right way to use it, but being purposeful can make the increase more significant. It's also valuable to remember that Social Security benefits are taxable for some. Depending on your total income, a segment of your benefits may be subject to federal income tax. A benefit increase might slightly alter your tax picture, especially if you're near one of the income thresholds. This doesn't mean the increase isn't worthwhile, but it does mean you should incorporate taxes into your overall strategy. Reviewing your withholding or estimated tax payments could be a shrewd move for some recipients. For people who haven't claimed benefits yet, but are planning to shortly, these updates are relevant too. If you start receiving benefits after the increase takes effect, your initial benefit amount will reflect the updated levels. This can sway decisions about when to claim, especially for those approaching retirement age. While claiming decisions are complex and depend on numerous variables, knowing that benefits have been adjusted upward can be part of that calculation. Families of beneficiaries might also detect changes. Spousal benefits, survivor benefits, and benefits paid to dependents are all connected to the primary beneficiary's amount. When the base benefit increases, these linked benefits can increase as well. That means the update's ripple effect can extend beyond just one person in a household. In the end, the fundamental lesson is simple yet potent. Social Security payments are rising, and this touches SSA retirement benefits, SSI, and SSDI. The increase is automatic, linked to inflation, and crafted to help beneficiaries manage escalating costs. The exact amount differs per person. The timing hinges on your program and payment calendar, and the net increase may be shaped by Medicare premiums or other deductions. Understanding these nuances helps you sidestep confusion, defend against misinformation, and make sounder financial choices. As the new payments circulate, watch your benefit notice, verify your bank deposit or check amount, and ponder how the increase fits into your budget. It may not fix every money problem, but it is real currency. And in today's economy, every uplift matters. Staying informed is the optimal way to guarantee you reap the full benefit of this update and are set for whatever changes follow. If this guidance served you, please support the channel by liking this video and subscribing to my channel for more crucial updates. Your interaction empowers us to continue providing clear, actionable insights.